Hello and welcome everybody to the DecisionPoint Trading Room. My name is Erin Swenlin and I'm here with my father, Carl Swenlin from DecisionPoint.com. And we're here to help you get started and into this week. We'll let you see what our indicators so far are telling us. And I will be doing a sector and industry group deep dive, if you will, and I will take your symbol requests. Symbol requests go in the Q&A box, and the chat box is for you to talk amongst yourselves. Just make sure if you leave a message in the chat box that you select in the drop down to send it to everyone. Otherwise, it just goes to us and we don't pay attention to the chat room. We pay attention to the Q&A box. Feel free to ask any question that you wish from Carl or I. You've got our undivided attention right now. We are not registered investment advisors, so all trading decisions are your own. Anything that you see in this trading room or read in our blogs, particularly when we talk about buy and sell signals, buy and sell points, none of those should be considered calls to action. All right, let's go ahead and get it started as everybody's piling into the room. Dad, go ahead and take it away.
Okay. Let's see. The market is acting very bullish right now. Earlier this month, we had a PMO top below the signal line, which is very bearish. That happened right here, and we got actually to this low. So it was bearish, but not for very long. After this bounce, we got a pullback that basically erased all the gains that we had on the day before. Right now, we have bounced off of the support, which has been very persistent, and is looking like it might be breaking out of this. But the market's already up, the S&P up over 2.5%. So asking for more than that in one day is a little bit much. It's really, we started this weekend, or basically on Friday, we looked at some very bullish indications for the market. Not so sure that the bear market is going to be over, but I think we're going to see a pretty hefty rally here at any time. First of all, we've got in November 1st, we began a 6-month period of favorable seasonality. And that's pretty heavy. The lows on the unfavorable series usually come in September or October. This year, it looks like it's going to be October. But this is really a double bottom across June and October. So that's a nice broad base. Could rally, have a pretty good rally out of that. We have indicators are very oversold. Here we go. The Swenlin trading oscillators, breadth and volume, have a positive divergence. You see they were very short-term positive divergence at that last low in September. And we have a very heavy, profound positive divergence now against these low. And notice that both the short-term and the ITBMs, that's the IT breadth momentum and volume momentum indicators, have a positive divergence. So it's looking very positive at this point. Sentiment is off the charts bearish, and our friend Mark.
Mark Young.
Yes, he's going crazy with so many extreme bearish sentiment readings, which is really extremely bullish for the market. Okay.
These are going to finally play out.
So we want to see that breakout take place. This declining tops line here. We want to see a breakout on that. And let's see if we Did I get an update on that? Yeah, it's not breaking out just yet. So what are we going to do? Let's say if it is a positive, if we're going to have a rally here and even the beginning of a new bull market, which I seriously doubt, but at least just give it a look here. What do we do with this? We have this double bottom here on the diamonds. That's the Dow Jones Industrial Average ETF, and double bottom. And here's the projection. This is 51 points on this particular chart. 51 points to the confirmation line, and then above. So we would expect to go 51 points above here, which is 392 would be the minimum upside projection. That would put us at new all-time highs. And you don't have to even go that far to get to new all-time highs. And so we have the Dow. Let's look at this. I want to spring this on Erin. She hasn't seen me do this one before. But we got here are the Dow Industrial Average stocks. And what we look for, we have let's go back to that diamonds first. We have a low here and a lower low. Now, what we want to see on a stock chart that might be interesting would be a stock that's making a higher low at this time. So we have Apple, we've got, and it would go against June, but Amgen, not so much. But you look through, I'm not going to hit every one of them. Boeing's a potential, Chevron. This is Goldman Sachs, and so on. And see, that is one trick. We don't get this kind of a setup all the time, so it is worth mentioning that that's one of the strategies that you can use. Yeah, United Health with healthcare is one of the stronger sectors. Okay, you have any comments on that, Erin? I have a couple other things I wanted to hit before I go to the indicator.
No, I think that's a great look. I mean, it does show you where the strength is within the Dow, and some of those short-term rising trends out of the September bottom is certainly looking interesting for quite a few of these.
You know, the higher low trick, it's not foolproof. Some of these stocks that are making lower lows might turn out to be champions, but that's with this comparison. This stock, CTF in this case, this stock is resisting the pull of the broad market to go to lower lows. So it's showing strength during a time of market weakness. Okay. John Malden's article this weekend, he was talking about how the 60-40 portfolio management technique is suddenly failing. What that is for many years, it has been believed that if you keep a balance of proportion of 60% equities and 40% bonds in your portfolio, the bonds will hold up your portfolio when the stock market is going down, and vice versa, which guess what? It's not working anymore. And here's why. We've looked at this chart before, and I was really shocked to look at it again. It's really, really breaking down big time. This is the 30-year bond, and this is a 40-year time period from 1981 to the present. I guess that would be 41 years. But so for that long, that's most people's lifetime in the stock market. And it's worked and it's worked and it's worked. And now it's not going to work anymore. And what we will probably see is bonds going down for many years, perhaps another 40 years. So this whole trend has been broken, and it's seriously, I think we looked at it when it was down about here, and then it bounced back up, reaction rally, and then it's going to lower lows. So not a good technique any longer, 60-40.
Where would you say the support level is on that chart for bonds? Because I'm looking at it just
Support level?
Yeah, the next support level.
Now, let me just play with it. Because there was one, and there's the next one. So right in here is a pretty thick, there's a lot of congestion. It's hard to pick one of these bottoms as being it, but in this area, we could look for a bounce. But, it didn't go up in a straight line, and it's not going to go down in a straight line. But at the bottom is really falling out. So what about these trend? We were breaking out of the trend channel and twice. Well, actually, if you get to about 4 times, these are outliers. This is the last gasp kind of activity before things finally broke down. We could think of this as smart money suckering in the dumb money to unload their positions so they wouldn't be holding as it goes down. Okay, that is the end of that. Let me just look at a few of the indicators. The new highs and new lows actually didn't help us much on this low here. But you notice that we got the positive divergence here. That's what we look for. That happens a lot with the new highs and new lows. Okay, we pretty much looked at everything that I really want to look at in the indicator for this week, but looking at the 4, which is the dollar, gold, oil, and T-bonds. The dollar is breaking down. This is a Adam and Eve double top. So that's telling us that we're going to break through this support here, and I better get rid of that there. We're going to break through this support, and this would be the next support level we could look to hold after this support is broken, and then this rising trend line. But I'm getting more like Greg Morris in terms of believing that the horizontal support is really a priority above the trend lines, because it represents, when people are finding support and bailing out. Okay, gold is rallying today, up over 1%, which is nice. We have a double bottom here, and it's a rising bottoms. When we get a high above this high, we could say it started a new rising trend. USO suffering, but it is above the trend line here, and it may be we were starting possibly a new rising trend. Bonds in a downtrend, and expected to continue that in the long term. And I think that will do it. I think if we cut our presentations a little short, we'll have more time to answer the questions.
Absolutely. So, and we are getting a few in here. One of the ones I'll address is it possible to access this recording afterwards? If so, how? We are on the StockCharts TV YouTube channel. You're going to find all of the recordings as of late, I think in the last 2-3 months since we started doing this. for StockCharts TV. We've been doing it free for some time, but now we get the recordings played on StockCharts TV. So if you just go to the StockCharts TV app at 3 p.m., let's see, 6 p.m. Eastern, you'll find the replay that day. And then shortly thereafter, it will go on to the StockCharts TV YouTube channel. Just go there, click on the videos tab, and you'll find it right near the top for the most recent. All right.
Erin,
Yep.
on the announcement mail for this program, is there a link to the YouTube channel?
I don't know that there is. I will make sure that goes in. I know that in our DP reports, we do have a link, and I think on the blogs and links page, we also have a link to those replays on YouTube.
But for people who get that email, that would give them a way to search for prior.
Yeah, I'll see if Zoom allows me to do that, but I don't know. We'll find out. Neil asks, what is an Adam and Eve top, Dad? You showed a chart with that.
Okay, what was that chart?
I don't remember exactly which one. We've been seeing a lot of these double bottoms, double tops of late. So maybe it was on.
There it is.
There it is.
The dollar. Adam and Eve is, Adam is a very sharp extended point, and Eve is a rounded
top, yeah.
Softer top. And you can take it further than that, but
we'll let everybody else use their imagination, I think.
That's the basic thought behind it. You know, I say on the Q&A, there's a really very involved question that would be a challenge for me to read all the way through. So maybe you want to address that.
Okay. Let's see. An inverse ETF for bonds. One, I know that there are quite a few out there. The one that I know that I own and have been using is PFIX. That's more of an inverse of the 10-year than the longer term bonds, but I think Triple T might be one. I'm trying to think of any others, but definitely there are some out there. And like I said, Larry, I know the one that I follow is PFIX.
The question I was referring to is the very first Q&A.
Yes. Okay. Yeah. Because it talks about the RSI and such. So we'll go ahead and look at those monthly, and because it looks like we're talking monthly charts for those two stock symbols or ETFs. I'm not really sure. I have to look those up. The question is there such a thing as too bad is good? I think in a bear market, finding stocks that are really awful is still not going to be a guarantee that you're going to see that reversal just because they're that bad. I know that for me in a bull market, maybe I would be thinking that way, but in a bear market, you know, everything can still continue lower. It might still be at these lower levels that we haven't seen in years, but that doesn't mean that it can't go any lower. So I would be very careful. We'll look at those two symbols when we do our symbol requests. Want an update on the Rydex ratio? I know I have that chart fairly handy. I don't know if you do.
You need to share your screen.
Okay, let's do that. Right now I have the RRG up there. Okay, so I will, let me just get to my chart lists here. There's the new highs, new lows for the NYSE. We do actually have that positive divergence in play there.
Yeah, yeah. Mm-hmm.
Just happen to be on that. So the Rydex ratio. So this is a sentiment chart. For those of you not familiar, I used to go over these every week on the old Market Watchers live program. So what we're looking at is the inflows for the bear funds, well, actually the assets that are sitting in there currently, the assets that are in the bear funds, money market, and bull sector funds. And then basically what we do is we take the bear and money market funds and we take the bull funds and we do a ratio. So you can see that bear money market above bull assets there. So that becomes our Rydex ratio. When the market is extraordinarily bullish, you're going to see really low readings. This is an inverted scale. So you're going to see higher readings here as far as the location on the Rydex ratio when people are extraordinarily bullish. When people are extraordinarily bearish, this is what you're going to see, that price or the ratio being very, very low. And you can see that obviously the inflows into these bear and money market funds has been significant, whereas you've got that lowering amount on the bull sector funds, which isn't a big surprise when you look at what was going on when these tops and bottoms happened. It was right here at the top. So people started to get very bearish once we started to get that first big decline there coming through. So right now, and you mentioned it with Mark Young, he's studies sentiment. His website is, let's see, wallstreetsentiment.com, I believe. And he has, as you said, we're struggling because things are so bearish. And typically sentiment being contrarian, you would expect to see prices start to rise when people get this bearish. But so far, bearish behavior, bearish sentiment hasn't really come to pass in a real reversal to the upside, at least since back here. So, you know, that tool of sentiment, we always really considered that, you know, secondary, tertiary to what we study with price. But this is, you know, to a point now that we do have to kind of put it on the wayside because it just keeps getting more bearish.
Yeah, well, for one thing, people are right for a while.
Yes.
You know, when it gets extreme, even though it's extreme, people they're looking at the market, they're bearish.
Yes.
Maybe. So, yeah. And ultimately, all the selling has been done. And then the thing, before you know it, then here comes a short covering rally, which I guess we would say we just had two of them.
Yes.
Very close together, short covering rallies. And I'm not sure if this is another short covering rally, but I'm sure there's some covering, but not to the extreme we got on that reversal last week.
Right. So we do see the ratio certainly in oversold territory that we saw at the end of the 2020 bear market. But you also can see that it was, you know, quite a few months or weeks while it stayed there before we got that reversal that did end up calling the bottom of the 2020 market. This is encouraging, but at the same time, this has been going on quite a while. It will likely continue to go on quite a while. So we could actually see sentiment readings getting even lower there. These are updated, by the way, in the evening. So you're going to find that these charts will show the last trading day. So that just to make sure everybody is aware of that. All right, so that answered that question. All right, let's go ahead and dive into the sectors, and then we'll start looking at some of the other questions there.
Okay.
Okay. So I had that all set up right here. Let me go ahead and update it. I need to get our lovely photos out of my way. Okay. All right. So what we constantly are looking for, at least what I'm always looking for on the sector CandleGlance, are PMOs and what they're doing. And as of last Friday, I did note that we had some sectors that were starting to show some interesting relative strength with staples. Healthcare, you can see, has actually already had its positive crossover continuing higher. A lot of double bottoms here, which is encouraging. Most of them look more like even Adam bottoms than Adam and Eve. And you can see that we are starting to see these PMO crossover buy signals. So that is encouraging for comm services of all things. I really wasn't a fan of that. We still do not see a breakout above that 20-day EMA. So I would be very careful with this area, despite having that PMO buy signal coming in. You can see that XLF financials, which was actually one of the sectors I was bandying about in my mind for DP Decision Point Diamond subscribers. Fridays, I do a sector and industry group to watch going into the next week. I was all set in the morning to go with financials, and then by the evening, I saw staples looked a little bit more healthy in terms of the participation under the surface and the outperformance. So I ended up going with staples, but both of these sectors still look really healthy to me as far as this bear market goes anyway. Industrial, yes?
Notice that there are only two sectors with a higher low, a low higher than the June low. And that's healthcare and energy.
From here to here. Right there, from there to there. Indeed. Right. So XLE, I mean, certainly the sector to watch. I mean, I've been using that one, in the past because it has had the most strength. Certainly still showing strength. Hit overhead resistance. I'm a little bit concerned when I looked at the oil chart. Makes a little less, a little less bullish in that area. But, as you can see in the very short term, we don't have a lot that have rising bottoms in this very short term out of the September lows. So that's a bit of a problem going in. So at this point, I mean, I think financials look pretty healthy. Healthcare, no pun intended, looks healthy. And we can see XLE and XLP with that brand new crossover buy signal. So let's dive into just a few of these sectors and see what their participation looks like under the surface. We'll start with XLE and XLV, as they do have higher lows. Thank you for pointing that out, actually. All right, so there you can see we've got that PMO buy signal, nice whipsaw. And then when we look at the silver cross, it's flat right now, but it's still in a rising trend, which is something you're not seeing on a lot of the charts for the sectors. It's really strong outperformance here, but again, outperformance against the market doesn't necessarily mean higher prices, as you can see here. Stochastics rising. But underneath the surface, we have some decent participation. The first thing that's going to get bigger would be the stocks above their 20, and that is indeed happening. You can see for the sector, that's the first thing that's going to be crossed for most of the stocks. They're going to look a lot like this. And you can see the next one up is 50 and 200, but notice those two numbers are exactly the same. So we're really not seeing any new movement above the 50 and the 200 within healthcare. And I would like to see that, those two increase as well. All right, XLE, we can see really nice participation numbers as far as, the percentages that we have there, much higher than many of the others. Pretty much the same amount of stocks above their 20 and 50. It's not a surprise, again, looking at the configuration of XLE. Little bit, let me get a thumbnail in here because that PMO looks a little bit suspect and not too bad in the thumbnail. It is still moving up nicely in here. It's kind of hard to tell. So energy still looking pretty safe. We talked about staples. That's one of my favorites right now. Nice bottoming formation, breakout from this declining trend. Only recently, it does look a little bit suspect now, not getting above that 20, but really like that PMO crossover. And then you can see that we are starting to see more stocks above their 20 than above their 50, which means they're starting to see improvement under the surface. Stochastics looking pretty good. Relative strength is a little bit suspect here as well, but notice a new crossover for the Silver Cross Index. Financials was the other one that I liked. And then we'll look at industrials and move forward to some industry groups. You can see that we have the nice little double bottom here, but we don't have it confirmed yet. We don't have the breakout above the confirmation line. hit 50-day EMA is turning down, but we do have that PMO crossover buy signal and decent participation. But as I said, if you compare this to Staples, Staples definitely had higher participation numbers, but this is going again in the right direction with more stocks above their 20 than their 50 than their 200. And then finally, industrials. And for those of you who like these charts and want to see all of these sector charts, those are resident on our website. So you can, any subscriber to any of our reports has access to these particular chart lists. You can see the double bottom again here on XLI, but really not challenging its confirmation line just yet. PMO is on a buy signal, but it is rather flat. And notice the participation under the surface is still really puny for industrials right now. Notice also that outperformance, we're not seeing that right now. Stochastics back above 50, which is good, but again, you know, I like the look of it on that CandleGlance chart, but I'm not quite as thrilled with it when I look at the participation under the surface. All right, so let's go ahead and take a look over here at some of the industry groups. Which sector do you like the best right now?
Me?
Yes.
I'm not crazy about any of them. You know, I look at the energy chart. That's the one that leads, and you know, and everything. But I don't like the look of the chart. It's just too choppy.
Right. So let's we'll dive into that group though, since it's one that you mentioned. So these are the industry groups within. So you're going to see the industry group chart over here on the left. Oil, equipment, and services. Again, this is what bothers me, is this overhead resistance just hasn't been overcome on oil, equipment, services. You can see the same going on with integrated oil and gas. I mean, certainly the indicators are positive, don't get me wrong, but this is one of the things that has me a bit bothered by this sector. Notice PMO turning down on exploration and production. Pipelines have really been suffering. Starting to see some movement though out of those lows as it bounces off that support level. And we do see it above the 20-day EMA, stochastics really rising strongly, and new PMO buy signals. So this is kind of a beat down area here in pipelines, but we might find some interesting moves there. But the problem is we're in a bear market. This might be the reversal. This might be what we're waiting for and have been. But ultimately trying to find, as we were talking about earlier, trying to find those beat down stocks and then expecting them to reverse is dangerous business in a bear market. But this looks a little bit encouraging here with that rising trend in the short term. And coal pulled back to the key moving averages here, but is starting to reverse. PMO is turning up above the signal line. Stochastics not on board yet though, with a breakout here. So it's interesting. Usually stochastics give us kind of that insight earlier than the PMO, but it looks like in this case, the PMO may be giving us the insight first. Healthcare was another one that looked pretty strong. Nice double bottom forming. Again, it won't be a double bottom until we get the move above that confirmation line. Notice the PMO though, picking up some speed here and a new buy signal, and stochastics in this case have turned around and are rising. So medical equipment looking pretty good here. Biotechs, a little bit choppy here. They're awfully volatile to be in here trying to play it while it's in this really choppy trading range. But certainly PMO bottom above the signal line, which looks good. Declining trend hasn't been broken on healthcare providers. No PMO buy signal yet. Medical supplies. Again, it's sitting at the bottom. We don't have any breakouts above the 20. Pharmaceuticals, now I do like that breakout above the 20, 50-day EMAs, getting ready to hit the 200. So that will give us a much better idea of whether pharma is going to continue higher. But certainly of all of these healthcare industry groups, I like the pharmaceuticals the best with that little breakout. And finally, we'll look at a little bit at industrials. I'm just going to click through them. You can see double bottoms, but we need to see those breakouts above the 20-day. Airlines was one I was looking at on Friday as a possible industry group to watch, but getting a bit of a pullback here to the 20. It is up on the day, so maybe not a bad area. Not getting above the 20, not getting above the 20. Choppy. I mean, there's just not anything here in industrials to me that looks as good as, say, pharma on the health group, healthcare industry group. That's not terrible, but you can see the 200-day is pretty much holding it down. Not bad for industrials, no. Too choppy. A declining trend, railroads making the turn, but still looking a little bit suspect there. And truckers, again, kind of this back and forth volatile movement sideways. It's not the kind of thing I'm interested in. This looks like a great reversal in process for transportation services, but we still don't have confirmation of that double bottom. It's still pretty iffy. All right, so we took a look at some of those industry groups. Time for your symbol requests and questions. So I'm going to look at the two because our anonymous attendee has sent us these two symbols. I'll give a look at just the regular charts, but I know that the interest level here was on the monthly charts. All right, Scott's. Nice little bottom here. I like the way it's rounding back up. PMO looking good. Stochastic still below 50, but certainly suggesting this might be a good price bottom here. Relative strength is, the group is kind of performing in line with the S&P, which hasn't been a good thing. We're starting to see a little bit of outperformance of Scott's against its industry group, but still, I'm not really happy with the way relative strength is lining up. We do have a positive OBV divergence, so that is a good thing. So, I mean, I think the daily chart doesn't look so bad. It is up over 5 3/4% right now, so entering it might get a little bit tricky. We'll look at a 5-minute in a moment. We're going to look at the monthly chart since that's where the question was. And yeah, the monthly chart, pretty darn ugly. So the question was, what is your opinion? RSI below 30, very long term, 10 to 30 years long. Is this a very rare? It is very rare for the monthly RSI to go below 30. Absolutely, it is. But you can't count on that as far as a reversal play. Monthly, this does not look healthy. So I would be very, very careful here. And then we wanted to look at VFC on the monthly, and then I'll look at those 5-minute charts. Breakdown here, big double top breakdown. It could certainly move lower and start getting into this range we saw back here in the early 2000s for VF Corp. But yes, you're seeing these very oversold readings on the RSI. But it's like we're seeing all these very oversold readings in terms of sentiment. So I don't know that I would be counting on this as a place to get that reversal. You can see with VFC, we had a fake out. I don't like this chart as much as the Scott's chart. So we'll look at a 5-minute really quickly on that. This is a trading room after all. And there's the 5-minute. So the 5-minute candlestick is for us to determine where to enter and exit. And that is about it. I do not use this to determine if I want a stock or don't want a stock. An entry is defined as a PMO crossover buy on the 5-minute chart, the 5-minute RSI being positive. So in this case, the last buy point arrived right in here on the big gap up move. So you'd still be okay if you had entered on the open. Then it's just been kind of consolidating and pausing after that big strong move. So RSI remains positive, but then you're seeing the PMO starting to drift lower because we are getting this sideways kind of movement going on here after that big push to the upside. So I don't see a buy point coming in except for an aggressive one. I would watch and see if we do get a pullback, take back some of the gains today, and then look for that PMO to maybe start turning up but I don't think I would want to enter this if the PMO is pointed downward. Hopefully that answered your question. KYMR. This is a biotech. Remember, these can be very volatile, so you need to be careful. I suppose you could call that a little bit of a double bottom there. The main thing is we are getting a breakout above the 20 and above this short-term overhead resistance. And you've got the PMO, which is not on a buy signal, but getting close. RSI above 50. This looks like a pretty nice chart on the beginning of something good. 6.18% rise, though, unfortunately. And that means there's a good possibility we'll see a bit of a retracement. But I like the look of this chart. So let's go ahead and look quickly at the 5 minutes. And you can see the buy point came in right in about here. So that would have gotten you in really on that breakout, which would have been pretty much a great entry point and a really nice area where it gave you the signal and the breakout at the same time. That's always nice. Currently, since we are currently on the buy signal, we can see the PMO, though, trying to turn over a little bit here. And the RSI is overbought. I would be looking for, like I said, a little bit of a pullback, take back some of this giant move to the upside. If I saw this and I came in, I don't know that I'd want to enter just yet, but certainly I'd be watching this chart pretty closely.
How about METC?
Yes, this is coal. This is one I go to often when I'm talking coal. So, yep, Eric's a subscriber, so I should have known. Okay, so coal I've been really bullish on. It ended up, I was bullish as it started to come up here and break out, and then of course it paused its move. But I do like this breakout right now here, Eric. This is great. RSI positive, PMO just getting into positive territory. Look at stochastics. They had started down, but they're scooping back up above 80, which is very, very positive. The group in the short term not performing that great, but that was during the consolidation period, and now it looks like the breakout, possible flag formation here. I like this one. I think coal looks pretty good, and I like this particular one. So let's look at a 5 minute. Where would we find an entry? Last entry, unfortunately, came back here on Friday. I mean, it would be great if you had already thought about this chart, Eric. Hopefully you were watching that 5 minute. You can see that the PMO since, though, excuse me, is flattened and really isn't going anywhere. That's more of a function of the fact that the rising trend is the same. We're not getting any acceleration. We're not getting much deceleration. But we are starting to top here, and it's gotten below the support level. So I think you'll get a better buy point on this when it does look like it's moving downward. PMO still in decline. Watch for a PMO turn here. I don't know that you need to wait for the crossover buy signal. So when you get that PMO turn, I think that would give you another possible entry.
Okay. Anna wants to know if there's a buy setup on Microsoft and Disney.
All right. Well, I don't want to give her two symbol requests, so I'll just go really quickly so that we can try and do that. Yeah, I mean, the RSI isn't positive yet. Certainly looking encouraging here, but I think we've looked at some better charts. Notice this is going to be gap resistance and resistance here at that June low. We've got a filled black candlestick with a long wick right now, and that's a bearish candlestick. So maybe not an entry today. Looks like it needs a little more time to mature. Disney, double bottom. PMO hasn't quite turned up. I think these are all a little bit too early, in my opinion. I think if this bear market rally turns into a real rally here, that might be then the time to go look at these charts, but they're just a little too iffy right now. So I would say no.
Okay. What is your opinion on TNX yield? There is not much resistance between 4 and 5%. Most of the market focus is on the 10-year yield, but Carl is more focused on the 30-year chart. Any particular reason? Yeah, because there's a lot of historical data on the 30-year. You could apply the same analysis to the 10-year. I don't know how far back it goes. You want to try a monthly and
yeah, this is let's go here to the 10-year. Monthly goes back. It's not too bad. We can get a few more years in here. Not bad. So 4 and 5% is what they were talking about, which is this area right in here for overhead resistance. And I agree. I don't see a whole lot of overhead resistance at this point. This was kind of the last area, and you can see we got the breakout here for TNX. Next area, boy.
have you got, can you find 40 or 50 years on that? I
Let's
don't know
see.
how much data there is.
Wow, more than I thought.
Yeah.
They might have filled it
You
out
see
for
there's
us.
a downtrend, and it's like the 30-year bond is breaking out. So
Yep. This is probably kind of a resistance zone from these tops, those bottoms, these bottoms. So we are, I think, hitting some pretty strong overhead resistance for TNX currently. Overbought though. I mean, we keep talking about it being time for the yields to start topping, but you know, every time I look at these yields chart, Dad, I just don't see it. I mean, nothing about these charts tell me that, you know, we're done with the rise in these yields. This is the perfect area though, based on that monthly chart, for these to pull back, which is what happened back here. So we could end up seeing a bit of a double top happening, but
yeah, there's, you can put a line across the tops and you've got a rising wedge, which implies that it'll be pullback. But in the long term, I think yields are going to go up. That's it.
yeah. I mean, I want to look at your pretty yield chart here, since we've got a little bit of time left. Where is the
long term there?
yes.
It takes about 10 minutes to load.
I know, right? And these go back pretty far too. So, when I look at this chart and see how all of them have really broken this giant declining trend, and we're talking about a declining trend that started really back here in the 80s, but strongly right in here through the 80s and 90s. And that's just a huge breakout here. And overhead resistance, we still have room for it to move higher. So I don't know that this is it.
Something's got to change in order to drive interest rates back down. Now, maybe they can try to do it artificially. I'm not sure they can, but
agreed. All right.
I don't think they're unrealistically high in terms of what the market should be able to stand.
Right. It's kind of a different environment right now. They're always different, but
okay. TSCO.
Yep, Tractor Supply. This is discretionary. It's just in a trading range, and it's hitting the top of it. And it's been fairly true to that trading range. PMO is looking a little iffy. You have that big filled red candlestick followed right now by a filled black candlestick. I really don't like the setup here. You can see also relative strength to the group is not very good for this one. As I often say, I think there are better choices out there. If you're going to trade a trading range kind of stock, one that's been so true, you don't want to be getting into it at the top of that range. There's a high likelihood you're not going to get the breakout. It's tried 3-4 times, still hasn't broken out.
It depends on your assumptions. We talk about potentially that there's a pretty good rally about to start. And, this one has a a higher low, October low than the May low. So you've got that working for you. You know, things, if this rally really does break out, take off, and I'm not sure how you haven't called me on that on that assumption, but you know, it's just a possibility that that's going to happen. So if you look at it in those terms, this may be one that would work out. But you're right; it's not doing much at this particular time. Nothing in this chart, particularly not very much anyway.
Right. And this is why I often talk about waiting for confirmations. I mean, you really want to wait for the confirmation of a breakout with at least a tiny breakout. But you can see we've had some failures here at this level. So I think it's important to wait for that confirmation. But, you know, everything on the chart's just not quite gelled yet.
Okay. Neil says that I did a very good job describing the Adam and Eve double top. Okay, ASTS.
Okay. All right, mobile telecom. Nicely interesting double bottom kind of here. It's a little bit more of a trading range. Don't have the breakout. It is above the 20. I like the way the PMO is making that scooping move. And here's why I like stochastics. They were already starting to react, particularly back here, even when price was moving lower. So that's a good sign. It does perform slightly better than its group. Problem is its group is still struggling just a bit here. It's a 6.45% rise. I would bet that you're going to end up with a bit of a pause when it hits this overhead resistance, if it can stay above the 20, just because that is so strong. But, you know, a lot of times if you're coming in at the bottom of a bear market or a bottom of a rally, you know, you're going to see these breaks up above, and then you'll get the pullback after that breakout. But as you were saying, Dad, I mean, that still could be the beginning of something, but this is early. I would be watching for a snapback after a big move like this, but certainly watch list material. If we look at a 5-minute chart, you can see that the last buy point would have been here, where we had the PMO whipsaw back into a buy signal while the RSI was positive. So that would have gotten you in right around here. Of course, the best time would have been on the open, which often will happen.
You know, what we do with the decision point alert, the whole mission of that publication is to determine which way the market is going to go, try to get an idea about which way it's going to go and how long, et cetera. So once you've decided that what's going to happen or what you're going to count on happening, that's where you can start lining up what you're going to do when it happens. But it's, you know, rising tide lifts all boats. And if we get this rally, 80-90% of stocks are going to go up. You know,
Yep.
It's just that. So
that's it. So that's why we often say the DP alert goes hand in hand with decision point diamonds, because ultimately the first thing you need to know is where the market's getting ready to go or looks like it's going. All right, we have time probably for like a few more.
TBF.
This is the short on the 20-year treasury, which I think was an answer to a question earlier. I don't think I'm going to go through it because we know bonds are terrible. And an inverse on it, TBF, this looks like a pretty good vehicle. It's highly high volume. So we'll go past that.
Okay. STNG.
All right, industrial. Nice breakout. It did get the, you know, you had the false one though, because it is pulled back and it is, I guess it's sitting on that now support line. Certainly like the PMO crossover, positive RSI, stochastics above 80, which looks great. Okay, so I have to say all the underneath the surface things look good for this one. And I do like that breakout. Got the breakout snapping back. So we may end up with that reversal continuing forward. So to me, I got the confirmation with that breakout, and all the indicators still look pretty healthy. So I like it. 5-minute chart. Ooh, no buy point. Certainly had a nice day, and you can see the bearish just really pulled that back down to earth. This is pretty good support here. Does look like it might be bouncing. This one would be tough because the PMO is in such decline, so forceful. Waiting for that turn could be a while. So I would want to know price first. Are we getting a good reversal? I still don't like to buy if my PMO is on any chart is pointed downward. But, you know, the rest of this daily chart does look pretty positive. So might be worth it. I just think that I would want that 5-minute PMO doing something better.
XAX.
All right. So yes, the Amex, let me get a little bit of a longer term chart here. Really, I don't know. I don't see anything great here. I don't see anything not so good here. You know, it's not really tracing that closely to the S&P. It's outperforming it. I don't know, Dad. What do you think? To me, it's just
Give me a longer chart. Give me a longer chart.
Yeah, it just isn't saying much to me here.
Yeah, it looks like a consolidation, really, a high-level consolidation at this point. How much of a decline have we gotten from that top? Okay, so
22.
Well,
from here to here.
So yeah, it's not as suffering like the other major averages. So
yeah, it's going to hit all-time highs here on this particular one.
I'm just going to take a wild guess, and I don't know if this is true, but it's maybe has a lot of energy stocks.
Yes. All right, 9:59:58. So I'm going to have to close this down. Thank you so much for joining us in this free trading room. You'll find the recordings posted on YouTube in the StockCharts TV channel. Just go to the tab that says videos, and you will get the most recent one of these, plus some of our older ones that will give you an idea of what we do here. Of course, come check out our website, DecisionPoint.com. For those of you sticking around so far, if you use coupon code DP trial and the number 2, that will give you 2 free weeks to try us out and see what you think. So that's all I've got for now. And with that, Dad and I will say good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.